U.S. milk production declines, the influence of heat stress and bird flu on milk supply, significant shifts in the CME futures market for Class 3 and Class 4 milk, and the risk management deadline you don't want to miss. That's what we're covering today with Curtis Bosma in the HighGround Dairy Monthly Market Insights Report right here on the Up-Level Dairy Podcast. This is the podcast for dairy farm owners, managers, and advisors who are committed to profitability, sustainability, and excellence. I'm Peggy Coffeen, and it's my mission to bring you the conversations that will up-level your skill set and your mindset so you can be a top performer in the dairy farming business. June 30th marks the application deadline for a dairy revenue protection policy with a new agency. And does it really matter where you get your DRP coverage? Well, we'll dig into this today as HighGround Dairy offers comprehensive insurance solutions from dairy market experts, ensuring your operation makes informed decisions to navigate market volatility. Find out how the markets are moving and how it can impact your bottom line with a link in our show notes. This episode is brought to you by HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Information shared in this podcast is for educational purposes and is not a solicitation to buy or sell commodities. Opinions expressed are current as of June 18th, 2024 at 1 p.m. Central Standard Time and only represent the views of the speaker and not those of HighGround Trading unless otherwise expressly noted. Let's hear this June monthly market insights update from Curtis Bosma with HighGround Dairy. Welcome back, Curtis, for the monthly market update from HighGround Dairy. And you are coming to us from Chicago today, correct?
Yeah, this evening is the kickoff for HighGround's Global Dairy Outlook Conference. So glad to be out here in the Midwest. I thought when I left California that I was escaping the heat, but it seems to have followed me here to Chicago as well.
So we're all going to blame you in the Midwest for for the heat wave that we're experiencing right now. But I know there are some great things on your agenda with this Global Dairy Outlook Conference. You'll be hearing from dairy producers and from people throughout the dairy supply chain at this event. So any of our listeners that aren't following HighGround Dairy, make sure you find our links in the show notes to follow along with this event and hear the updates and reports of what comes out of that. And speaking of updates and reports, it's June. And Curtis, welcome back to give your monthly market update. What is going on in the markets, Curtis?
Well, it's June, it's dairy month, and we have had a lot of excitement here over the past couple of weeks. So if we look at futures prices, so looking at CME futures for Class 3 and Class 4 as of June 14th. Class 3 for Q3 of 2024, we're sitting around 20.85. That's up about $1.21 a hundredweight from where it was exactly a month ago. So that puts some pretty nice numbers in the milk check for a lot of dairy producers out there. On the Class 4 side of things for Q3, we're at 21.43, which is roughly where we were last month. But as we go out into the further out parts of the forward curve, we've got numbers in the high 19s, the high 18s, in some of those months. And from a percentile basis, what's available to us now in terms of milk prices is quite impressive. We've seen a nice run up in cheese prices and in other commodities to kind of get us to a nice spot here.
So some good movements and momentum that you see going on, but you're looking at the future with cautious optimism because there are some challenges on your radar.
Yeah, exactly. We're in this tug of war currently between supply and demand as we go through the price discovery process with the cash markets and the futures markets all together. Right now, when we look at U.S. milk production, we've had 10 consecutive months of year-over-year declines of production here in the U.S. That is pretty significant. It's not necessarily surprising. We can look at all the contributing factors that have been going on. We watch here weekly the U.S. dairy cow slaughter, and as of the most recent reported one here, year to date, we're down over 186,000 head in terms of what we've been culling out of the milking herd. That's down 13.5% from where it was a year ago. So I think expensive replacements, the margins that come with the beef on dairy trend has definitely tightened everything down. And that's what we're kind of seeing and hearing from a lot of producers is everybody's running with a lower cull rate. We're going to see older animals going an extra lactation cycle in the herd. And that does have some effect to the ability to efficiently produce milk at every farm that's facing those sorts of challenges. We also have bird flu has been going on. So, as of the 10th of June, we have added a couple of additional states to the list. So I know Iowa, Minnesota, and Wyoming have been added to the list here recently from USDA. And then as of, I think, June 12th, we're up to 96 reported dairy herds that have been impacted by it. We're hearing rumors that there's some potential herds that maybe haven't been reporting, but have had some impact on their milk production from a few cows that have exhibited symptoms or anything like that. But yeah, still, that's another contributing factor to what we're seeing here on the milk supply. And then lastly, we were just talking about this. It's hot out there, and heat stress is something that is always going to be a seasonal effect to the dairy industry. And right now, for the month of June, these are some pretty high temperatures that we're faced with, and that's definitely having an impact on milk flows.
So putting these pieces together that you just mentioned. So obviously heat stress, we're in that season right now. We're starting to see some potential milk production impacts from bird flu that are starting to just be a little more prevalent. And then you couple with that, what you also mentioned at the beginning, that's that decrease in dairy cow slaughter. And then of what we all know as well, the tightness in the heifer market, heifer inventory. So put those pieces together for us, Curtis. What does that conjure up in your mind? And forward project 6 months out, what can producers be thinking about right now based on the challenges that are imminent and are prevalent, and how they can plan for the future?
I mean, based on where milk prices are at in the futures market and where they've been here over the last week or two, and where feed costs are at as well, there's some profitability out there. The difficulty is whenever markets are profitable, or at least projecting these sorts of levels of profitability, it usually would say step on the gas and let's make some more milk in these conditions. But there's a lot of hurdles, as we're seeing, in that process. It's not going to be very easy for producers to ramp up production in the face of all these things that are going on. So it's definitely something HighGround, we work with not only producers but other people across the dairy supply chain, and we've been making sure everybody's aware that these are not quick and easy problems to solve for U.S. dairy farmers. These are going to take a long time to sort out.
And Curtis, you've laid out some of the challenges and things going on that are obvious in the dairy market, but you also always bring a perspective that takes a wider lens at what is going on in the markets at large. So what do you see going on trends-wise in this monthly update as you take a broader view at the markets?
So if we kind of zoom out a little bit and look at the data, because essentially across a 7-week period, we took the CME cash cheese market from a price point where we were at $1.40, $1.50 a pound, all the way up to over $2 a pound in these markets. That is a pretty drastic run. And it's not just the cash market that drove those things there. We saw a lot of activity happening in the futures markets as well. So when we look at that, I mean, the only nice reportable data we have is from the CFTC, gives us some look into the commitment of trader reports, which essentially tells us from a managed money perspective, the largest position holders out there as of April 9th. So if we look backwards a little bit, we can see that managed money positions were net short almost 9,000 contracts in cheese and class 3 milk combined. And then as of May 28th, that has shifted now to a net long position of over 2,600 contracts. So that means basically in a 7-week period, as we were seeing the cheese market moving higher a little bit, the sheer buyer aggression and activity that's been driving the futures markets to the upside, these large managed money position holders have added over 11,500 contracts during that 7-week period. If we look historically, that's one of the most aggressive swings we've seen from short to long in recent history, at least.
So make some sense of that. What does that mean for our milk checks?
I think one thing to look at here is when we were down in these lower prices for cheese, it made everything look doom and gloom from the producer side. The milk checks don't look great. $1.30, $1.40 cheese are not great numbers to plug into a margin calculator to figure out where things are at. But now that we've seen this big rise in prices, I think people are starting to feel a little bit more optimism. But I think we talked about this briefly last month, is at $1.40 cheese and at $2.10 cheese, there's still someone within the supply chain that's dealing with some of the stress. It's just a different end of the spectrum a little bit. So yeah, when we were down at those low prices, it was easy for us to get export opportunities opened up. It was easy for processors and different players on the buy side to put together all sorts of contracts and get things moving and clean up that balance sheet ultimately for cheese and for class 3. But now that we're back at these high price points again, we're running into some issues, and that's where things kind of back up a little bit. I think we've been quick to forget that there's a large amount of investment in milk processing that's kind of happened here in the US. And a lot of that has been heavily focused in cheese and class three. So the overall capacity to make cheese in the US is still there, and that pipeline exists. Whether or not the raw milk is there to run through, that's kind of something that we're closely monitoring. But right now, I mean, when you look at some of the spot basis levels of class three milk in the upper Midwest, it's been running higher than it was last year, where we had steep discounts throughout the first half of the year. But it's not running at significant premiums, which means that production is probably still running along quite well. But at these higher price points, it's difficult for us to export. It's difficult for us to move things along. And then that's where we have to make sure we're keeping our heads on straight and seeing, like, hey, maybe $1.40 cheese was an overreaction to the downside for this market, but it opened up some buying opportunities. But hey, now maybe $2 cheese, at least for as we're standing here today in June, maybe a little bit of an overreaction to the upside as well. So, I mean, the only thing that means is there's going to be some volatility along the way. I still think the long-term fundamentals look great, but when we have an opportunity to look at the futures market and see an opportunity to transfer out that risk of losing out on the opportunity or not being able to remain profitable on the farm, we have to make sure we're seizing these opportunities and we're not deprioritizing risk management at a time where it's presenting a historically very good opportunity for us.
So, Curtis, you're just mentioning risk management as such a pivotal piece of the puzzle right now. This is actually the time of the year when dairy producers are really taking a good hard look at what the opportunities are. Give us a little bit of enlightenment to the conversations that you're having with dairy producers right now about protecting their risk and why this time that we're in is so important.
So first and foremost, I mean, obviously when we're presented with a really good opportunity, we want to make sure we're staying in front of people and making sure people are taking action on that and still remaining somewhat flexible. I don't think there's anything in the fundamentals that are going to say that markets are going to be totally falling apart here in any time in the near term. But like I said, when we have those opportunities to see something, we're going to want to jump over it. But now the other reason that we're kind of looking at this here is so June 30th actually marks an important deadline when it comes to the dairy risk management industry. So for anyone that's participating in the dairy revenue protection program, this is kind of the deadline of if you're looking to transfer business from one agency to another. Those transfers can really only take place on July 1st. So applications have to be submitted by the end of this month ultimately. And which kind of leads me to how much I love my big questions, Peggy. My big question I think I'd like to kind of pose to a lot of producers is, does it matter where you get your DRP coverage? And I think that's a question that comes up a lot in conversations with producers. And as we all know, since all these insurance programs are highly regulated and the price you pay for the premium is not going to differ depending on which agency you work with, a lot of people tend to think, hey, it doesn't matter who I work with. But we think it's important that producers ask themselves that question and kind of look around and say, hey, am I really getting the most out of this program? And do I really feel like I have a good grasp of what's going on? We at HighGround, we feel like we're really positioned in a great way to be that agency that can help producers navigate these sorts of complicated things. We understand dairy markets. We came into the insurance industry as someone that was first and foremost a futures and options brokerage firm. So since the underlying price that goes into the dairy revenue protection program is the futures market, well, that's something we happen to know a decent amount about. And we work with clients across the supply chain. There's a lot of other, advisors that are out there that simply they only work with farmers. And I always say, they get to see half the equation in terms of the information that's out there, but there's going to be a lot of gaps that are out there. Certain things that happen because a certain commercial player needs to reposition or do something differently. And that's where HighGround, having the network that spans not only the U.S. dairy supply chain, but the global dairy supply chain, is we get access to a lot of information. We have a lot of good, interesting conversations. I mean, going to be having a lot of those conversations this week at our Global Dairy Outlook conference in Chicago with our customers. So yeah, there's a lot of benefit to having an advisor, especially in these important insurance programs, that actually understands these futures markets. And then we're a full service risk management firm. So anything that has to do with managing your margin, any tool that's out there, we have a resource for it. We have people that are knowledgeable on how to navigate those things. we want to make sure that producers understand that, hey, these insurance programs are a great first step in the right direction to managing your margin on a proactive and consistent basis. But there's a lot of other tools out there that we can employ as things move forward. There's a lot more things we can do on the feed side. There's a lot of things we can do kind of beyond even just simply the milk side. And understanding those tools and being educated on them, we feel is a very important piece of the puzzle. So we want to kind of work with clients to not only develop that foundation, but to continue to build from there and add some more horsepower to their strategy moving forward. And then lastly, I think what's important about HighGround is this is what we do. This is the only thing we do. So our top priority is always going to be your bottom line. There's a lot of other insurance agencies out there that are offering all sorts of different other business items, and they're not solely dedicated to your margin. So we have to make sure that our incentives are aligned with our customers, and that's something that we've always wanted to keep at top of mind in everything we focus on in this business. And it's unfortunate to see that there's some, other companies out there that, they may offer this as an additional auxiliary service to producers, and they make it convenient for people in certain circumstances. But ultimately, if that's not their primary business purpose, they might come up short on a lot of the things we're talking about, it's unfortunate to see. And that's where we want to make sure that producers are again, asking yourself these questions: is the agency I'm working with the best fit for my operation in the long run?
So with this pending June 30th deadline, now is the time for producers that are interested in evaluating maybe their current situation or looking at what opportunities are available. We'll have all the links in our show notes so that they can reach out directly to you and others on your team, Curtis, to experience what it could be like to have someone who specializes and lives and breathes dairy, but also has the capacity to look at other segments of the industry and put it all together in that package. And Curtis, anything else that you want to add to our June monthly market update today?
The big theme when we're talking about the markets is just make sure right now, when you have an opportunity to seize a margin, don't hesitate. I think that's the biggest concern we have here in situations like this. Is I think a lot of people put a lot of focus into how much they may be spending on premiums or how much it may cost to secure a margin or something like that. But really the most expensive thing in all of that is the opportunity losses that come with deprioritizing risk management. If you're not looking at this consistently and you're not taking actions when good opportunities are being presented, that's when we tend to really swing and miss on a lot of these things. And that's where those inconsistencies can really start to plague us on our strategies. So like I said, we're really encouraging people here to just keep your head in the game and make sure that you're keeping a priority on these markets.
Excellent. Well, Curtis, thank you so much for this monthly market update from HighGround Dairy for the month of June. And we'll let you get back to the HighGround Dairy Global Outlook Conference that's going on right now in Chicago. And hopefully by the time you leave the Midwest, Curtis, you will take the heat and humidity and all the heat stress with you. So thanks again for jumping on with us today.
I'll see what I can do.
We're going to hold you to that. So thanks again for jumping on with us today for this monthly market update from HighGround Dairy. You just heard the monthly market insights update from HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Thank you so much for listening to this episode. And hey, if you value the information that you're hearing here on the Up-Level Dairy podcast, and just take a moment to leave a 5-star rating in your favorite listening app, or better yet, a review letting me know why you love Up-Level Dairy podcast. These little efforts are the things that help us continue to grow the show, reach more people, and serve the dairy community. I'm Peggy Coffeen, and thank you for listening to the Up-Level Dairy Podcast.